Topic 1. AI is front and center. Leadership churn at OpenAI, the shutdown of an Amazon service, Jeff Bezos touted NVIDIA's outsized role in the AI boom, and Bill Gates' warning of AI-driven economic upheaval. OpenAI has seen accelerating executive departures, including Chris Malin, head of data centers, joining 25, along with recent exits of senior revenue and infrastructure leaders, and says it is reorganizing. Investors are increasingly nervous ahead of a planned 2027 IPO and an estimated $852 billion valuation. OpenAI's announced compute investment target of roughly $600 billion through 2030 implies massive data center expansion that is proceeding amid domestic and international pushback, as local governments and politicians tighten rules and raise issues around permits, water, and power use. Amazon's Mechanical Turk, the crowdsourcing data labeling platform launched in 2005, will wind down on September 30, 2026, marking a structural shift in the labeling market amid worker livelihood and quality concerns, including reports of labelers using AI to do tasks. NVIDIA sits at the center of the AI boom as a high-expectation supplier, but analysts warn revenue concentration among hyperscalers, Amazon, Google, Microsoft, raises risk and heightens short-term volatility. Bill Gates warns AI could broadly displace jobs and recommends national coordinating bodies, international institutions, taxes on AI robots similar to labor taxes, and policies to preserve some human work. Topic 2. Inflation and central bank tightening. PCE inflation cooling to a 3.3% core annual rate, while the Federal Reserve's preferred inflation gauge held steady at 3.7% in July. Fed, ECB, and BOJ officials flag further rate increases as markets remain cautious ahead of Jackson Hole and Treasury yield volatility. The Fed's preferred PCE gauge was unchanged at plus 0.2% month-over-month in July, with headline annualized inflation at 3.7% and core PCE, excluding food and energy, at plus 0.2% month and a 3.3% annualized rate, signaling no clear disinflation trend toward 2%. The Fed has warned that it will tighten further if core inflation does not move toward target. Markets largely expect a September pause but have priced a modestly higher chance of additional tightening, keeping policy uncertainty elevated. Other major central banks are also signaling possible hikes. The ECB is weighing September increases amid Middle East energy risks, policy rate assumptions moving from 2.2% to 2.50% in some scenarios. And BOJ surveys show rising odds of a September move, estimates shifting toward 1.25%. U.S. Treasury yields have risen and remained volatile, roughly 10-year 4.67%, 30-year 5.9%, 2-year to 4.23%, and despite Treasury buybacks to cushion supply, long-term rate pressures persist. Geopolitical energy risks continue to feed inflation uncertainty. Topic 3. Geopolitics and energy. Geopolitical tension around the Strait of Hormuz and Iran-Oman talks, U.S. tightens sanctions on Iran, and a Trump-Saudi nuclear deal reaching Congress. Developments easing oil fears for now but keeping markets wary. Canada has retaliated against U.S. tariffs by raising duties on steel and increasing rates on $20 billion worth of goods, heightening trade friction. Iran and Oman say they are discussing a temporary joint corridor through the Strait of Hormuz and proposals for undersea mine clearance, which briefly eased oil prices into the mid-80s per barrel, but left uncertainty as Iran's Revolutionary Guards accuse the U.S. of interference and threaten closure if demands are not met. The U.S. has stepped up sanctions on Iran, targeting revenue streams and trading partners, while avoiding sweeping measures against China. Expectations are low that sanctions alone will quickly change Iran's behavior. The Trump administration has submitted a 30-year civil nuclear cooperation deal with Saudi Arabia to Congress. The pact, tied to Saudi normalization steps, lacks permanent bans on enrichment and reprocessing, according to critics, raising proliferation concerns